Hi, Steve. Thank you so much for joining me on Scouting for Growth.
Nice to be with you, Sabine. Thank you so much.
So, Steve, I know you have over 25 years in the field, right? In insurance, in finance, in technology. Have you seen legacy systems impaired, you know, create a little bit of a challenge, let's say, for insurers to be able to adapt to the rapidly evolving tech landscape we are in right now?
You know, a few decades ago, there weren't the number of systems and the complexity of systems in an insurer's landscape. Generally, there was one or several admin systems, and those admin systems did everything. And sure, there were challenges, but the cost and complexity of IT, of technology, was relatively low compared to the way it is now. And what's happened is the proliferation of systems to solve business problems. The complexity of those systems has increased exponentially, in part because of the sheer number of systems, and also in part because the landscape has evolved to this acceptance that implementing a claim system or implementing an administration system or a finance system should take years or many, many months. And that's just been an accepted uh, guiding principle. And we'd like to challenge that. We think that there are opportunities to drastically simplify the landscape and lower cost and increase business utility.
So it's interesting, right? Because 70 to 80% of IT budget today still, Steve, is spent on maintaining legacy systems. And our industry, as you know, need to start changing that and looking at new ways to innovate and actually fulfill the customer needs. And I think with current development with artificial intelligence, maybe we are going to see a little bit of a wake-up call. But in your view, Steve, what are the common mistakes, right? The strategic missed steps insurers make every single day when they actually invest in core systems vendors.
I would phrase that a little bit differently. I think that a lot of carriers have made successful bets in the past. They've gone out and bought a system and customized it, and to a large extent, historically, um, the systems generally have fulfilled their promise to the business. They might have been a little expensive, hard to implement, but at the end of the day, um, the stakeholders got what they wanted.
Yeah.
And what's happened over time, though, is these core systems have not fulfilled the promise as often as they did in the past. And there are newer technologies that can do all of the same things that these monolithic platforms can do. And the pace of technology change is accelerating. And so I would say there's an emerging opportunity for insurance carriers to leverage this new ecosystem of tooling and providers that isn't as monolithic and doesn't require so many months and so much cost to implement. There are opportunities for insurers to reduce their legacy tech debt or the amount of just old systems in their environment, which is generating all of that cost. And that's okay. If you're sitting in a carrier, the pace of change is so fast, you might be relying on information or news from 1 or 3 years ago. And today, with emerging technology, it is possible to reduce that accepted figure of 70% of run rate is going to be just maintaining stuff, that accepted idea that implementing a complex claim system or administration system is just going to be expensive and hard. Um, I would posit that there's a new idea that there's technology out there that can be low cost, highly flexible, and meet your business needs without compromise quickly. And it's this idea of cost and speed and flexibility that we are seeing in the marketplace that has simply changed.
Yeah, I mean, when you look at legacy environments, often the technology has been over customized. And remember my world as well, working for our core system vendors. And what I think at some point, the whole objective is for flexibility to be there. But, over customization potentially can lead to inflexible system. And then another issues I've seen in recent years working with insurance technology providers is integration. The communication with the APIs can be very difficult because of the constraint on the legacy system, which then result in difficulty for, a carrier, an insurer to be able to take advantage of ecosystem approaches. So you already mentioned that there's new ways of doing this, right? Technology potentially is becoming a little bit more commoditized today. So there is more accessibility to it. So why do you think insurers could invest maybe differently today? What is the balance between off-the-shelf technology and expensive platforms, you think?
So I would say that it begins with a hard look at your technology to ask yourself, is the delivery of that thing? And by the way, a lot of these programs fail. I've seen figures anywhere from 30 to 60%, depending on who you ask, but that's a pretty high percentage. And you've got to ask yourself, is it worth the investment for my business? So if you have a generic business that looks like all the other business, maybe the cost of customization is very low. But if for your business, you're customizing a lot, and even when you're done, you have a lot of spreadsheets, maybe that's not a great idea. And if you think about a platform, what it does and what it historically has been designed to do, it has unique data structures. It's somewhat difficult sometimes to move data into and out of that environment, into another environment. And so that strength that we saw 20, 30 years ago in these systems has now become a weakness. Because if you're looking at an ecosystem with many, many different technologies and spreadsheets, moving data between those systems, reconciling all that information, customizing each of those systems, making sure that they all work together. And then when you change one system, looking at the impact to every other connected system, that can become really complicated, risky, and expensive very quickly. In modern, mostly cloud-based technology, it's now possible to think of data as an enterprise asset or even an ecosystem asset. So you don't need to coil this data up into strange structures just to do one kind of calculation or one business process. You can keep that data in a structure that works for multiple business processes and multiple calculations. And that's an emergent capability that's available now at scale. And these are some reasons that it's worth investigating, because now you have a choice. And I'm not saying that you should always use monolithic systems or never use them, or always use customized componentry or never use them. What we're proposing is now there's this idea of choice, and the new solutions that are being developed in the marketplace, a lot of them are plug and play. So there's commercially available technology that other companies have spent a lot of money to make those bits of technology work really well. And the trick is in how they're assembled. And are they assembled in hyper customized ways? Are they assembled in a way that can scale? And with modern cloud-based assets, the answer to the question of can a solution be developed that's built on reusable componentry? Can a solution be developed that can scale and be easily supported? And the answer is yes, in most cases.
Fascinating. I remember some of the numbers I read in the press around failed policy administration system implementations, and that those numbers are there. I think some of the numbers I've seen around range between $300 million spent on failed policy admin system implementation to $500 million failed on X implementation projects. But the thing is, some of the numbers are there, and still carriers are still doing the same because we are just creatures of habits. So when you think about that, Steve, what strategies can insurers employ to unlock value from their existing assets, but also augment the environment to start building for the customer, for the new world we are living in?
Sometimes there's no choice. So if you're a CIO or a CXO and you need to implement a change in your company, the board may tell you you have to buy one of these major platforms, and that's perfectly fine. The exam question then becomes, how do you get that platform to produce utility as fast as possible? And I want to emphasize this idea of speed, which now is more important than ever in thinking about technology in our ecosystem. It used to be that every several years you would have a change in the technology ecosystem. You would see a new iPhone come out, and you could pace your development choices in years. And now technology is moving so much faster. It's weeks and months, not years and decades. And so if you think about the time that a traditional carrier might take to upgrade its suite of admin systems, it's certainly not accepted truth that that should be weeks or months. It's accepted truth that that should be 1 to 3 years. And it seems obvious to me that if you're going to build a bunch of requirements and hope that the technology ecosystem stays static for your 3-year implementation, that's pretty risky. So this concept of speed, of how do you get up and running with something fast and then iterate over time and produce business value in weeks and months. So as the technology ecosystem is evolving, you're already live. You're already, whether that's on microservices, a more bespoke technology, or a platform, or something in between, this concept of speed is more important than ever.
Yeah, it's critical. It is critical, partly because you mentioned that the business is moving to a much more modular approach nowadays, and we know that there is a lot of capabilities coming out in the world, partly low-code, no-code platforms that allows to build new digital capabilities. So tell me, Steve, what is Oliver Wyman doing in that space? What are the new capabilities we can actually tap into within your environment?
So Oliver Wyman has an amazing array of accelerators all across the insurance value chain. We have accelerators that replicate functionality of admin systems. We have accelerators that can actually help use natural language processing and AI to do data conversion from old data formats to new ones. We have accelerators that can do actuarial calculations, that can do subledgers, you name it. We have these calculations. What we don't have is industry recognized platforms. And we've elected to try something in the insurance sector. And our bet is that some of our customers may want to look at alternatives to traditional platforms or to traditional platform implementations. So let's imagine you're implementing a claim system, and you've decided, and your board said you need to buy the system, and you buy it. Before thinking about customizing within the system, is it possible to look at some of our accelerators to enhance the functionality of the system to match your business. Because that's how we've been working with our customers for years and years, is helping customers figure out these edge case problems, or when the big four or traditional consulting companies have gone in and something's not worked. How do you solve those problems? We've gotten very good at that. So what we've done is upped our game in terms of integration of these accelerators with traditional platforms to unlock the value in these platforms. To again get back to this idea of maybe you don't need to wait 1 or 3 years for that business value. Maybe it's possible to get that a whole lot sooner. And then we built an orchestration layer that can be used as an alternative for a platform that we can give to clients. And I use the word give intentionally in that we want the opportunity for some clients to disrupt the product value chain with this idea that every time you have a business problem, you need to go out and you need to buy a new platform or a new system. And especially a lot of the actuarial platforms and systems that are out there, we've heard in the marketplace that they're functional, but not ideal. A lot of our actuarial constituents want something that looks more open source. They want something that's more transparent, that's controllable, lower cost, maybe lower no maintenance. And so we've built an orchestration layer that can be stood up in our client's ecosystem, where we can bring in our algorithms and our calculations and string them together into something that looks and feels an awful lot like a platform, but isn't a platform, that'll sit on top of your enterprise data store and do the data store and do the things that a platform might do. So those are two bets that we're making in the industry. We're especially from an actuarial standpoint, staying away from the platform game. And we're indexing pretty hard on not bespoke implementation, but Lego block implementation. So if we build Lego blocks that can do all of the things that your system might be able to do, we can string them together in unique ways that fit your business model and also can scale just like a platform can.
So I heard modularity and orchestration, the two game-changing initiative or words. I think our industry needs to spend a little bit more time understanding what that means for their environment. So looking at your work, Steve, how can insurers reduce their core system expenditure from, I guess, billions, maybe? I mentioned that some of the failures we've seen were in the range of $300 million to $500 million. And so how can we get, to reduce those core system costs? How have you done it? What is your suggestion in that field?
Get started is my suggestion. There's no need to bet the farm on a new idea. I think that's irresponsible. But it's highly responsible to examine the ecosystem and see what's possible. And try proof of concepts. And if they're working for you, weigh the alternatives as you're making big choices and important choices. And as we're working with carriers on their technology ecosystems, we're advising and start now and prove out the value. And when the value's there, expand. And when the value and learn from your lessons. And if the value's not there, then pivot in a way that you can achieve your business value. Again, with this guiding principle of speed. Whatever you can do as a carrier to move at the pace of business and do that in a responsible way, those are the strategies that are going to win in today's marketplace.
Yeah. I read recently a McKinsey quote number, which says that, migrating infrastructure to the cloud for any CTO could actually result in 40% cost savings. So in addition to, thinking strategically about your core system or where your data is and how you actually interact with your customers and create those really unique experiences, which are modular, orchestrated, and then you go through this iterative process to really make sure that whatever you are tailoring is actually aligned to the segment you are after, right? The customer need, critical. And that angle around orchestration, I think, is also very important to remember, because when I'm thinking even from a quote from Salesforce CEO, more and more he said, we've worked on the back office, everything is moving to customer saving capabilities, right? Front of mind, front office architecture. So reflecting on his vision, which he's been deploying for years, SaaS model, customer experience or customer relationship management platforms, where a lot of capabilities are linked to Salesforce nowadays. How can insurers apply those type of thinking and insight around their investments and the investment they are making today, Steve?
A couple of comments. And you mentioned cost savings moving to the cloud. That opportunity certainly exists, and some peril exists. We've seen many carriers move to the cloud and stay cost neutral. And we've seen some carriers move to the cloud and see cost increases, particularly with grid computing. And this idea in the old environment, your technology was constrained with your ability to do things like advanced analytics. Just moving to modern technology loosens some of those constraints. And so, again, back to this measure twice or three times and act once. The cloud journey must consider the features of the tooling that you're moving into. And then you mentioned Salesforce and software as a service. Same concept, that we're exploring an alternative to software as a service. What if providers or consulting companies could give you technology and then it's yours? And there isn't this idea that some third party needs to understand your business better than you do. What if instead the technology were built in such a way that the maintenance was simple, fast, and highly customized? And again, a frustration that I keep hearing in the marketplace is, I'm waiting on my vendor to do X, or I'm waiting on IT, and it's not IT's fault for this customization, because if I'm sitting in IT, I'm prioritizing this vast array of constituents, and I've really got to allocate my resources appropriately to the highest business value. But it happens to mean that if you're a stakeholder that isn't in the highest business value and you have a medium or low value change, you have to wait because of the way technology is supported by third parties. What if instead it were possible, and by the way, it is possible, for companies like Oliver Wyman to give you the technology and make the support optional, or who supports it, or how much you pay, or do you have to pay anything at all? That world is open to you today.
Interesting. Because when you think about it, 37% of digital transformation initiatives still fail today, according to IDC. And the main reason is lack of change management, or, taking users on board on the journey of transformation. And so you are talking about stakeholder management, but also fulfilling those stakeholder promises. So what do you think when we think about building and shaping and designing strategies, technology, business strategies? How do we start bringing our stakeholder along the journey? I'm thinking about a lot of the underwriting and financial conversation I'm having now. I don't know whether it's because it's 2024. Everybody is focusing on risk assessment and underwriting and actuarial capability, and also understanding, how to drive value for the business, not just on the top line revenue, but do that profitably as well. Steve, what's your view?
Stakeholder management has always been important, but who are the stakeholders that need to change is now radically different. A decade ago, and I was one of these people, and you would get in conference rooms and meet with senior business executives. And it was super important to get the people in charge on board. And then it was that, but once you did that, the job of stakeholder and change management was to get everyone using what you decided to build on board. And that typically took months or years because a lot of constituents didn't want their world to change and may not have found the thing you built particularly useful for their particular job. And yet you had to convince hundreds, sometimes thousands or many thousands of people to use a bit of technology that may or may not have been useful for them, but certainly involved a lot of change. So change management occurred in how do you convince thousands of people or hundreds of people to use a new thing? Imagine the world today, though, where technology could be built, controlled, managed in a way that those thousands of people could assemble solutions that worked for them. Maybe the new change management is with senior executives. This idea that it's possible to build equally valid controls around your data, your security, your systems, without having to control the functionality or the monolith, without having to imagine that hyper customization equals more support cost. That's a difficult bit of change management to do because a lot of these executives, and I have been one of them, spent their entire career with this message that you need to control customizations, you need to control these thousands of people, or they're going to escalate your costs, or they're going to create a bunch of security risks. That's been the way you grew up, is this idea that hyper customization and personalization is the enemy. And the reason I recommend the proof point is not because of the end user or the customer. I think they'll be convinced right away. The proof point is with the senior executive at the carrier who looks at this possibility of a lot of customization where people are getting what they want, and this idea that the way to control that and your enterprise architecture looks different in the new world than it looked 10 years ago. That's a scary concept.
Absolutely. Scary concept, which takes me probably to a lens around culture because it's about internal change and cultural, culture of innovation and potentially also of collaboration, knowing, our limitations internally around what we can do and what we cannot do, and finding the experts outside to help us, I guess, with this legacy debt. How do you see this new world evolving, and how do we get carriers on board with the transformation?
We're at a good spot because a lot of people are worried about the economy. There are the competition has ramped up. There are disruptions to supply chain. There are a lot of reasons that if you're an insurance company, you have to innovate. And your legacy technology is falling so out of support that people literally might not be available anywhere to support it. So you have no choice but to change.
Question: do you think there's still COBOL in a lot of insurers? today?
Virtually all of my clients have COBOL, and uh, I had a client that's in the middle of a very long COBOL administration system rewrite, and so much talk is given to generative AI and these modern tools, yet most of the cost and complexity for a lot of carriers is buried in these legacy technologies, is buried in COBOL. And techniques to move out of COBOL into modern tooling are incredibly important to the business proposition of how do you move to the new thing? And part of moving to the new thing is freeing up capacity that's managing the old things.
Yeah, no doubt. So you mentioned generative AI. So I need to take you there, right? Artificial
Mm-hmm.
intelligence, generative AI, because we are talking about legacy debt and legacy systems. How do they marry? Because, most insurers probably spending money on running the business still today rather than transforming the business. And so, based on the client you're working with, how are you taking them on that personalization and customization world where most insurers thought we can't do that, right? We are not set to personalize and create that segment of one, but technically, the new technology should allow us to do that. How do we marry the two?
Two things. The first is embrace it. Our company and our parent company rolled out a generative AI solution to 90,000 employees fast. And they did it out of the need to innovate, to mirror what our clients are doing, but also by necessity. Because if we didn't roll out these modern tools, there would be even more risk for our constituents because um, our employees were using ChatGPT, whether we liked it or not, and providing like a more controlled alternative was super important for our business and super important for our clients. The second thing I'll say might be a little bit controversial. I think that generative AI is going to be groundbreaking and world changing, but it is a class of tooling amongst a lot of different classes. Generative AI isn't going to by itself replatform your COBOL platform. It's just not. It's very useful in handling large data sets and being able to uh, do new things that will really transform our world. But some of these things that we're talking about in terms of retiring legacy tech debt, orchestrating algorithms, um, may involve generative AI, but generative AI might just be 1/10 of that or one piece of that solution. So this idea that ignoring it is probably not going to work, and thinking it's going to do everything for you is probably not going to work. But recognizing it as an extremely powerful class of tooling and controlling it appropriately is a really good idea.
So, Steve, what's your view as to how the insurance company of tomorrow can finally maybe identify the right step to future-proof their business and the technology investment they are making, right? When we look at a future where technology can be pretty much commoditized, we can just take components, modular capabilities off the shelf, bundle them, we add our magic sauce, right? Our differentiator to it, because that is what makes our proposition really unique. So, what's your view? How do we future-proof our world?
Three things. The first we've just talked about is quickly retiring legacy tech debt, looking at that holistic problem and breaking it down and divesting yourself from technology that's holding you back. The second is moving at speed and speeding up your business and the way that you're using technology. And that involves, as you said, embracing ideas that maybe someone else built it, and you don't have to build it. The last one is talked about in the press, and I'm going to say it. Predictive analytics are the future. Predictive analytics and hyper-personalized ways are the future. A lot of carriers have based their business model on detective analytics. I was saying, let's look at losses and then use that for underwriting decisions. Now it's possible to consume extremely large data sets and begin to make accurate predictions about what's going to happen in different hypothetical futures. And insurers that master that and develop muscle memory around predictive analytics and think about that in their product strategy, think about that in terms of how they're engaging their customer and how they're running their business, are really going to leapfrog their competition. And you and I were talking before this podcast briefly, and you mentioned someone that both of us really respect that was mentioning the power of data. And I said, I disagree. I want to qualify that. I think data is incredibly important. But this concept that if you're just hoarding data, if you're just collecting it, moving it around into some massive data store, provides negative utility. This idea that you're using advanced algorithms that are advancing by the day to generate more and more accurate predictions, to be able to help you with your business model, help you make more money, reduce your loss. That is how data should be used. So the algorithm, in my opinion, and the way that you're thinking about your data may be way more interesting than your data itself.
Fascinating. The way you manage your data and the way you capture it and then apply the algorithm on top of it, this is where the differentiation is going to come from.
Mm-hmm.
Any last word of wisdom, Steve, for today's discussion?
Stay current. If you're listening to this podcast, if you're examining the world around you and you're developing your own opinions, you're doing the right thing. And we're here to help. And I'm always interested in conversations, and please reach out if there are questions, criticisms, a conversation that you want to continue. This is my life's mission. So I'm glad to be with you here today.
Thank you so much, Steve. So if people want to reach out, where do they go?
They can reach us on our website, oliverwyman.com. They can reach me on LinkedIn. My email address is steven.abel@oliverwyman.com. Happy to hear from you.
Thank you, Steve.
Thank you, Sabine.